Hey everyone, recently on 24th May, Ministry of Electronics and IT published a report where it mentioned that an India-based AI supercomputer named Eravat has been ranked 75th among top 500 supercomputing list published in Germany. This system is installed under National Program on AI by Government of India. By the way, it is also the largest and the fastest AI supercomputer in India. Do you know who manufactured this supercomputer? It was manufactured by Netweb technology that has recently launched its IPO between 17 to 19 July. And there is already a lot of excitement for this IPO. In fact, on Friday, Netweb has raised 189 crore rupees before IPO from anchor investor at 500 rupee and received amazing response from both domestic and foreign investor. On the screen, you can see the allocation to anchor investors that include Nippon Small Cap with 7.14% allocation of total anchor investor portion. Then you have HDFC Dividend Yield Fund, HDFC Defence Fund, ICICI Prudential Innovation Fund, Aditya Birla Digital Fund, Aditya Birla Small Cap Fund, Axis Equity Tech Saver, Axis Value Fund, Hybrid Fund, then White Oak Capital Large Cap, Mid Cap Tech Saver, Flexi Cap, then Nomura Fund, Goldman Sachs India Equity, Motilal Oswal, Tata Small Cap, Franklin India, ICICI Prudential Life Insurance. So a total of 9 domestic mutual funds have applied through 19 schemes that cover 58.9% of anchor book and remaining 41.1% is from foreign investors. That's an amazing response. In fact, there's a huge premium for Netweb in grey market. And when it comes to IPO, I don't just look at the short-term picture. I always try to cover the IPOs that have a long-term potential to generate great returns. And Netweb technology is looking very promising for long-term purpose. So in this video, I want to discuss the business model of the company, future growth prospect, key risk, and of course the IPO details. Alright, let's get started. Established in 1999, Netweb Technology is basically one of India's leading high-end computing solution provider with fully integrated design and manufacturing capability. In simple language, it builds products that are million times faster than a normal laptop or server computer. Netweb offering can be divided into 6 segments: high performance computing, that is supercomputing, then second is private cloud and hyper-converged infrastructure, third is AI system and enterprise workstation, then you have high performance storage, then data center services, then software and services for high computing solution services. So company not only manufacture the high computing hardware, it also offers softwares required for high computing solution, including your supercomputing system, private cloud, data center, AI system and enterprise workstation. So far, Netweb has installed over 300 supercomputers, then 50 plus private cloud and HCI, then over 4,000 GPU based AI system and enterprise workstation, and high performance computing with throughput storage up to 450 gigabyte per second. Wow, that's crazy computing. Please note that Netweb is an OEM player in HCI solution. It means Netweb has its own set of products and services. For instance, within high performance computing system, it includes TCM. In private cloud, it includes Skylus. Within AI system, it includes Kubites. In data center, its product name is Camerero. If you look at revenue breakup, in FY23, 39% revenue is from supercomputing, 33% from private cloud, 7% from AI, HPS, data center each, 2% from software, and 5% from others. If you look at clients of Netweb, 50% clients are from government agencies and remaining 50% around are from MNCs. Some of its clients include your ISRO, then Indian Government Ministry of Electronics and IT, then IT Kanpur, IIT Jammu, then NMDC Data Center, then Graviton Research, then Institute of Nanoscience and Technology, JNU, Yotta Data Service, and so on. In terms of revenue split by industry, 47% revenue is from higher education and research, 6% from space and defense, 25% from IT, and 22% from others. I hope you got a decent overview of business of Netweb Technology. Now, if you look at the leadership, Mr. Sanjay Lodha is the promoter, chairman, and MD of the company. He has been associated with the company since 1999. So he has nearly 25 years of experience. For more details on leadership, please visit their website. Now let us try to understand the future growth prospect. If you look at the future is all about Internet of Things, artificial intelligence, automation, 5G technology, virtual reality and augmented reality. And these technologies are built over high performance computing. Today, every industry requires high performance computing. For instance, in fintech sector, there are high frequency trading, financial modeling, complex risk analysis. Then in healthcare, a lot of research is happening in creating new vaccine, developing innovative treatments. Then in manufacturing, IoT is a key enabler in driving operational efficiency. Likewise, you name any sector, automobile, telecom, aerospace, defense, it requires high computing capability at enterprise level. Then another big trend is use of public and private cloud for data storage. Today, all major enterprises are moving towards public cloud as well as some organizations opting for private cloud network. The key difference between public and private cloud is that in public cloud, the entire organization data is stored on third-party servers like Amazon AWS, Google Cloud, etc. And in private cloud, there's a separate cloud server network for the organization. And this trend would again require high computing service. On top of this, one of the biggest growth drivers for high performance computing is government support. In 2015, government announced National Supercomputing Mission with an aim to connect national academic and R&D institutions with a grid of more than 70 high-performance computing facility. Moreover, Indian government has also launched huge-scale digital projects like Aadhaar, UPI, DigiLocker, GST, and so on. Now, one of the key growth drivers for implementing such technology is high-performance computing and storage. You don't want your data to be stored out of the country. That's where Indian government is doubling down on digital initiative to enable growth of data centers within country. This big push towards data localization would ensure 75% of the data remain within the country. Government has also announced PLI incentives for IT hardware as well as telecom hardware. And Netweb has already qualified for incentives under both IT hardware and telecom domain. Netweb, with its 25 years of experience and history of building high-performance computing device for leading Indian and global organizations, has a very strong reputation in the industry. In addition to domestic market, Netweb is also looking to expand in EMEA, that is Europe, Middle East and Africa. As far as financials are concerned, in last 3 years, company's revenue from operations have grown from 142 crore to 247 and 445 crore in FY23. Numbers are in million and we are talking in crore. So revenue growth in last 2 years has been great. Out of this, more than 95% of the business of the company is from sale of products. Company's EBITDA has increased from 11% to 14 and now at 15.9%. And profits have grown from 8 crore to 22 and now at 46.9 crore. So profit growth is also brilliant. Its return on net worth for FY23 stood at 68% and ROCE also stood at 64%. Company has net debt to equity of 0.3, which is well under control. Also, company has good asset turnover ratio of 17.69. Company's customer base has also increased from 1,645 to 1,819 and now at 2,011. Inventory days have also reduced in the past. So financials for last 3 years are looking very good. Now let us try to understand the key risk. So the first risk is lower capacity utilization. Company has nearly 50 to 52% of capacity utilization, which is on lower side. The reason for lower capacity is to focus on low volume but higher margin business. Then second risk is lower order book. Company has generated 445 crore in FY23 and its order book visibility is around 90 to 100 crore. The reason is because the delivery cycle of the order book is only 6 to 12 weeks. So order book is although low, but delivery cycle is also very small. Having said this, the long-term visibility is missing due to lower order book. Then third risk is competition risk. Netweb faces stiff competition from all over the segment, including your domestic as well as your international company. For instance, within HPC market, key players include IBM, Atos, Lenovo. Then in private cloud, it includes VMware, Nutanix, Hedrat. Then in AI, it includes NVIDIA. Then in cloud service, it includes HCL, Accenture, Cognizant, your Tech Mahindra, and so on. So this competition risk would always exist. Then fourth risk is high dependency on top 10 customer. Top 10 customer of Netweb contributes more than 50% of its revenue. So any loss on business from top customer can impact the revenue and profit. Now as far as IPO is concerned, Netweb Tech IPO is between 17 to 19 July and issue size is 631 crore, out of which 206 crore is fresh issue and the remaining 425 crore is offer for sale. Out of the money raised from the IPO, 32 crore is planned for capex, then 128 crore is for working capital, 22 crore is for debt repayment. Its share price band is between 475 to 500 rupee and one lot include 30 shares. At higher price band, company would command a market cap of around 2,800 crore at a P multiple of 60. Generally speaking, valuation is on higher side, but looking at the growth prospect and the industry valuation in general, Netweb valuation is looking reasonable. Although we don't have any direct listed peer for the company, we can look at EMS companies like Keynes Technology that has a PE of 112, Avalon having a PE of 80, then Syrma SGS having a PE of 72. So all companies in electronics manufacturing are commanding a premium valuation. So overall, if we conclude, Netweb is a leading high-performance computing manufacturer in India with 25 years of experience. Company has a list of marquee clients, and there's a huge scope for growth in high-performance computing due to trends like artificial intelligence, cloud computing, IoT, 5G, and so on. Moreover, even Indian government is highly focused on digital initiative and ensuring Indian data remains within India. Government is also encouraging domestic manufacturing with PLI scheme, and Netweb has already qualified for it. So overall, the potential is looking good, and hence this IPO is looking worth considering for both listing gain as well as for long-term purpose. Although we have already discussed some of the key risks that you should keep in mind before investing your money, and make sure that you do your own research. I hope you'll find this video useful. I'll see you next video. Till then, take care.